This is my article from the weekend. I started by apologizing for my absence the previous week, but I was visiting the United Kingdom. We stayed with my school friend Alex Michaelis, who has a fabulously successful architectural practice and even designed Arijiju, a spectacular house in the Borana conservancy here in Kenya. We visited Bob Collymore, whom I can happily relate was in fine fettle. Bob has a dashboard and is very much the captain of his Safaricom ship, albeit remotely. And, by the way, Safaricom has sprinted out of the blocks in 2018, has rallied 10.28% this January, and is at a record high. Safaricom remains a must-have stock for fund managers from Nairobi to London to New York. Investors who heeded my advice to buy the stock when NASA launched its boycott campaign have made out like bandits. However, let's return to the United Kingdom. I must say I enjoy coming off the aeroplane to be met by that blast of cold and metallic air. Prime Minister Theresa May has confounded the naysayers and remains at the helm and proves once again that longevity is a quality all of its own. The Prime Minister is a little round in the shoulder, but she is determined and still there, and that is the overarching point. The pound closed Friday trading at 138.60, having visited levels well below 120 in the aftermath of the Brexit vote, and is now within sniffing distance of levels before the vote. The pound has returned 15.5% over 12 months. What is clear is that if another vote were held on the European issue, it would certainly produce a different outcome. Even Nigel Farage has called for another referendum. The Europeans have softened their language, and even Mojo Man Macron came courting in London last week. Any Labour leader worth his salt would have called an about turn and pivoted by now, but Jeremy Corbyn is seemingly not for turning. I spent many years living in Putney, and the High Street was a big part of my life. What is clear now is that the UK High Street is increasingly like a patient etherized upon a table. E-commerce and home-based deliveries have changed the world from London to China. Given the ubiquity of the smartphone here in Kenya, I'm certain the same disruption is headed our way, and that a lot of commercial real estate will turn out to be legacy assets. The millennials with their avocado-eating and cryptocurrency trading ways are just as likely to be African as they are European or American. See Mr. Collymore's article on sustainable trade, Meet the Platform, that he posted on LinkedIn. During my visit, Carillion collapsed with £2 billion of debts. The company had only £29 million of cash left. Carillion was at the forefront of the public-private partnership effort. What is clear now is that the government of Kenya simply does not have the resource envelope to pursue all its priority projects on its own balance sheet. We are surely going to see a much bigger PPP effort here in Kenya. The African Development Bank, who are notorious soft peddlers in these matters, said about Kenya, continued high public consumption expenditure keeps the budget deficit at close to 10% of GDP, while the expected maturity of public debt could lead to debt distress. Sure, a $2 billion Eurobond will kick the can down the road. The Eurobond market remain very, very benign for sub-Saharan African sovereign issuers. However, we're now operating at the margins. We need to get a grip, and we need to signal we are getting a grip. There is a cliff edge, and sleepwalking towards it is seriously suboptimal. Here is a photograph from an article that Condé Nast Traveller posted, asking, is this the most beautiful safari lodge in Africa? This is Arijiju, is quite unlike any other safari lodge. There's a link to Bob Collymmore's article, Sustainable Trade, Meet the Platform. Safaricom itself